Have you ever wondered if you or your business needs to file a return? We discuss this and more in this vlog.
Hi, everyone. Welcome to Modern CPA's vlog.
So we're not going to get into a lot of the specific details on like numbers and dollar amounts and things of that nature. But we do want to talk about how filing different returns, like whether or not that impacts actually having to file a return, like what type of business you are, or if you're talking about personal. So let's go through that a little bit about, what are some of the different rules that are out there for different people in industries.
Yeah.
And
So
not necessarily industries, but entities, I should say.
Yeah. So, by entities, you're talking about a C corporation, S corporation, a partnership, or any entity that's taxed as a C corporation, S corporation, or partnership.
That means LLCs that have some sort of a filing requirement.
Exactly. So, basically, if any of those types of businesses have any sort of activity, you're generally going to have a filing requirement with the IRS, and depending on what state you operate or states you operate in, even if you don't have any activity in there, some of those states will require you to file a tax return, even if it's zero. So it's really going to depend on the specific circumstances of your business.
Right. So you can have an entity that for federal purposes, you may have to file a return, no taxes are due, but on the state level, there may be a franchise tax, let's say, and then there would absolutely need to be some sort of filing because the state is going to have their hand out and they're going to want their franchise fee, whether it's a minimum fee or whether it's, some sort of portion of a fee because of, having some activity in their state, whatnot.
Right. Yeah. I mean, I have an example of a business that just this past year, then in 2020, they bought real estate, sold the real estate in 2020. So it's in a partnership and we filed a tax return. 2021, they had no real estate until partway through the year. All they did was buy the real estate. They didn't really do anything. But that not only have they filed before, which, once you kind of file, you want to keep filing until that business is closed. But they did have the purchase. The owners didn't think they had to file a tax return, but, I told them, yes, we do have to file because you had activity, even though there was no, income generated that year.
Yeah. So they obtained an asset and placed it into service, I assume, and probably the IRS is going to want to know what's happening and what's going on with that entity.
Absolutely, and by filing, you've established a set of circumstances for that year that the IRS or the government entity can't come back and say, oh no, you didn't include that on a return in the past, so we're going to deny whatever this thing is. Yeah, exactly.
Yeah. Now, individuals have slightly different rules, especially if there's no business involved. On a federal level, there are thresholds and you don't necessarily have to file a return if you're under a certain threshold. But that may not exclude you from having to file your state and your local taxes. So, you have to be careful that you still may have some filing requirements, even though a federal return may not be required.
Right, and a lot of states actually start with the federal number for how they determine their tax. So you may still need to you may still have to file with that state or city or local, but they may be picking up on the federal number to begin with. So you may have to actually produce a pro forma federal tax return. But you also have to look at, if you had any tax payments or any withholdings that, you may be under the threshold to file, but you could get that money back.
Absolutely.
So you may still want to file even though you're under the threshold.
Yeah, we see that a lot when kids that are, in high school or in college that are working, and they don't make a ton of money, and they did have some federal withholding, but they didn't, really didn't need to have federal withholding. We file returns for them all the time to get their money back. So,
Right.
whatever the little bit amount that is.
One other item of note in that same regard is if you have something that's creating a loss or some sort of carryover that you may not be able to get it that year, but by filing, you're establishing that loss to be able to carry forward to another future year to be able to
Yeah,
use.
which you absolutely would want to have. You don't want to leave money or deductions on the table.
Exactly. So,
Yeah.
So while you may not have a filing requirement, you may
want to file anyway. Anyway, let's just talk real quick about some of the other types of tax returns that people tend not to think is part of this, but really does have different rules. And those are like payroll taxes if you have employees, and even sales tax if your state has some sort of sales tax. In many instances, well, definitely with payroll, you are to file quarterly with the federal and state governments, and any local governments potentially, even if you had no employees. So if you've registered for all of those taxes at some point and had employees, and let's say you had an employee and that person left, and right now you don't have anybody, guess what? You still have to file zero taxes or zero returns for those periods, unless you want to close out those tax accounts.
Right, exactly. That's, you're going to get tax notices if you don't make those filings. The same thing with sales tax, and sales tax could be monthly or quarterly, or if you have very little activity yearly. Same thing with that. Once you've established your tax account, you have to keep filing whether you have activity or not, and until you close that account. So
yeah. So some people will keep it open for a period of time just so that they can get back into it very easily. Filing zero returns is a great way to just keep those accounts open, especially if it's a short-term interim thing where maybe have no sales tax this month and maybe the next couple months, but then you decide that you're going to start doing something, selling tangible property again, and will be collecting sales tax. And instead of closing it down and going through all of the gyration of opening them back up again, this allows you to keep the account open, no harm, no foul, no taxes due.
Right.
And then you can just roll right back into it when it's time to get going again.
Yeah, absolutely. And, with payroll taxes, for state unemployment, they usually attach an experience rate to that. So and as a new employer, they tend to have a higher rate to start off with, and that rate could be lowered over time. If you close that account out, then you're back to when you apply to that higher new business rate. So
you may not want that at all.
Right, exactly. So you may want to just keep that account open, and keep filing zero returns, especially if you think you'll have any employees within a short time.
Yeah. So this is great information. Thank you, everybody, for joining us today. If you like our blog and our podcast, please like and subscribe to our YouTube channel. And we also are starting a masterclass that is at moderncpaonline.com/masterclass. And we also have some DIY courses out there that could be really helpful to new business owners. So thanks again for joining us. Take care.
See you, everyone.